Hello, welcome. We're just about to open on the DAX. Just having a look at the levels. We've got an extreme gap here at the high where my cursor is. It's a little bit spaced out, it looks a bit funny. Basically that's the target. So we're about to open. Hopefully we'll see a push up. We've seen some selling come straight in really quick a minute before the open. It's really pushed down. Now we're coming up, so ideal situation. If you follow my videos, you'll probably understand what you're expecting. Hoping for perhaps a double top based on this level here into the R2. Concern is we could break through it and head up towards that R3. I'll just check the US. I've had some really strong activity out of the US, but 1, 2, 3, 4. The last 4 weeks hasn't had too much movement, so that's okay. So just quickly checking the UK. I haven't got the levels on here, but my ideal situation, it's always a bit scary by selling the index market because it's naturally attributed to going up or going long. It's the whole basis of the index market is that it slowly improves and the economy gets better. The companies that comprise that index get stronger or larger than the ones that predecessed it. So going short on an index, you really want to be sure that the market is likely to head south. Now we're coming up into an area where the price isn't holding that well. So it could be an opportunity to target this high. It's around the 16648 level. Obviously this isn't financial advice. It's just a hobby channel. So do your own research, do your own education and everything. Make sure you're across how the markets work and obviously there's risk involved, all of that. So we're just watching the open here. We had a really strong push down right before the open and then we've actually turned around. So there could be some more upside. I'm not convinced that we're going to get short just yet. But if you did want to get in now, for example, and you'd have your stops just above here, but if we do go beyond this R2, I would be concerned that we're going up for an R3 trade. The reason I'm saying that is because this solid push down, it's almost like the institutions were soaking up all of the volume that they could and then taking the market long, kind of tricking everyone to target this high. But so getting short, you'd have a really tight stop because I'm not 100% convinced that it won't continue going up. But based on the training and the education that I've kind of had in the past, it is likely that this the high gap, the extreme gap from yesterday's high price is going to be the target, and that is about 40 points away. And then secondarily, the close gap at 16,555. So from here, let's say, it's 120 points away. That's my thought process of where the market should go, down towards this high and the close gap, perhaps even down to this confluence down here, breaching the low structure down here. But we really need this candle effectively to make its mind up. So perhaps it's sold off and it's soaking up all of the buy orders, the natural share buying of the actual index and the underlying stocks within it, pushing that index up naturally, and then perhaps giving the opportunity for the market to then sell down and slowly make its way towards these preferred targets. On the flip side, if we do break this R2, we could be heading for the R3 and perhaps beyond. So I'd be just wary that the market can go against you. My ideal target is the high and the close. Now, some of the longer term outlays that I've seen, I did outline them in my global outlook for 2024. It's probably only valid for a few months though, because as the market changes, things happen in the world. It changes what the market should do. So some of those things that I've said on the larger time frame, I believe they're playing out as I expected to some degree, and perhaps they've got more steam in them, but if they've moved quite a distance already, then there's a fair chance they'll be turning back around and continuing on. So go check that out if you haven't already. I am also diving a little further into algorithmic trading. So I'm just going to check a couple of things. Bear with me one sec. So we're just waiting for this market to kind of make its mind up. And see where it's actually going to go. So you can see here, it is starting to push down. We need a bit more power for it to push down further though. And eventually I do feel like this high will get hit. Now that it is moving further south, this candle wasn't as bullish as I thought it might have been. I'd still probably want to keep the stop loss tight here though, because if it does breach this point and this high level here, we're really looking quite positive, which is not what you want if you're in a short position. So you really want this level to hold in this situation. So even from here, what we've got, maybe 20 points. Got to remember, sometimes there is a fade of the gap, which means people could be looking for buy positions off this previous day's high on a cash chart, and that could push the market up higher. So if you're looking for that bigger target down towards the pivot or the close, which is the purple or grey line down here, just got to be aware that people can tend to buy off this high. And if we do spike outside this Bollinger Band on a 5-minute even, we've got the breakout long and the R1 here, which could also see some rejection along with that Bollinger Band. It could really represent some good buying opportunity for some people. So you just want to be aware of what's going on in the market, what to look for. And if you start to see rejection or like buying like this around these levels, so see how it kind of came down, it's pulsing back up. If that happens around key levels that you're really looking at, that could be an indication to perhaps reconsider what you're doing. If you're not happy to take the extra risk and hold on for a bigger target, perhaps it's time to close out. But when it's in the middle of nowhere, and you're not happy with where the profit's at already, the market does often respect the rules and that kind of thing. It respects the levels, and it does make its way quite often towards certain levels. Obviously, there's days where the market just chops and changes and it doesn't really hit any level. It doesn't respond to the Camarillo breakout points at all. And that's part of trading. It's just about assessing and making your decisions, and obviously keeping your risk management heavily in check. It's the most important part of all of trading. So coming back up now, I would really hope that this market does push down from these levels, because this is a really quite a powerful formation if it does start to go long. I really wouldn't want to see it get past the R2 much at all, maybe 2-3 pips. If it does breach it, I think there's a good chance it'll just keep going up. So that's the thing with trading as well, is just slow and steady, bit by bit. It is a scalable asset that you can keep your money in cash. You're just hanging out and waiting for opportunities that look like they should work, understanding that sometimes they won't, and just being in the game, making sure that you're placing your orders correctly. Just jump over to the FTSE, see what's happened. Very similar action, not much movement at all. We've had a range of maybe 11 points tops. It's very limited movement on the FTSE. So the DAX is definitely the better market to be looking at the moment anyway. We've got the US 30 pretty much sitting at all-time highs. Will it make its way all the way up to 40,000? I'm not sure. So we're just waiting for this market to really make a decision. So those who did want to get in around this level here, where the mouse is on that first opening bar, when we kind of came up close to the R2 and lost a bit of steam, there's about 30 points in it so far, but really want to get down to an actual target before closing out. Otherwise you'll probably end up leaving a lot of money on the table. But unfortunately the market does kind of go in your favor a little bit and then turn back around, which can be really frustrating for traders. So it's just about being patient. Now I did just want to quickly talk about, while we're waiting for this to play out, talk about the algorithmic trading that I've been doing lately. So I've got a VPS now, and I've got some algorithms that are working, and I'm looking to basically build a portfolio that I don't have to keep an eye on too much, and just build up statistics and data, along with hopefully a positive return. Some of them are doing okay, some of them don't always do that well. So I'm hoping that the winners will balance out the losers, and eventually I'll build up enough data to create a really strong portfolio that's going to do better than my manual trading. As an example, I was running an algorithm not last year but the year before. It performed really well, but I lost focus. I'd moved and basically forgot that it existed. And when I checked the data and the statistics, it turned out it had actually performed really well. Probably one of the best trading outcomes that I've personally achieved. So that kind of made me think, hey, look, I should focus on algorithmic trading for a little while. So I'm building out a program and I'm building out access to expert advisors at the moment, which you can check out on the website if that is of interest to you. So it's really hanging around. It doesn't look like a very exciting day whatsoever, particularly when the market dropped so sharply right before the open. So it hung in there. The ideal situation we were looking for was it would hold and push up into the R2 and then start falling. That would have been a really good indication for us to get short, but it happened early. It kind of crept back up. We saw it start to gain some weakness for people to potentially get short. And now we're pretty much at break even from those people that perhaps might have got in short at that point. And if we do breach this R2, this orange line just above where we are now, then it's a really negative sign. If we kind of have a double top here from that pricing in the pre-market earlier today, be an ideal situation. You kind of get a little bit more of a push up and then turn around, but this looks like it could be kind of strong. So, and this level right here is where you really got to pay attention. So this is where people make their decisions. They get long, they get short, and they really either want to hold this level or it's going to break and probably head up to that purple level up higher. So we've got the extreme gap here. Is it going to be enough of a target for this market to turn around? It just looks really bullish. It's inside the Bollinger Band still on the 5 minute. I'm just going to quickly check other time frames. Daily, nothing on the daily. 4 hour, it's a bit too far away still. 1 hour, nothing. So what I'm looking at, just to be clear, is the Bollinger Band is really extended. So if the Bollinger Band was here at this R2, that would add weight to the reason I would want to get short. Even the 30 minute, it's out in the middle of nowhere between these two levels. The 15 minute, on the other hand, is in a good spot for the R2 to kind of give us a bit of motion south. So that's the only thing that I've seen other than the level itself and this price action back here in the pre-market to turn it back around. So if this level holds, it's a really good sign. If we get onto the next candle, we start going red, even better. But if we don't, there's every chance we head up to at least the halfway mark and then run into the R3. So we'd have to breach the M30 Bollinger Band, go straight up, but then all the others are basically outside that R3. So there's not much resistance if we break this point. So a lot of people that are trading the DAX, the German 40, they'll be watching this level here very, very closely. And it looks like it's holding, it's turning back around, and ideally we'll come down and hit this high and beyond. So it's a really strong target all the way down there. 140 points if you were short from here to get to the close. And often the market will continue beyond the close and go down to this kind of pricing area here. if it doesn't go long and just ignore all of the selling indicators that we've got going on. So algorithmically, what would have happened today if I was trading something using MQL5 to watch the markets? I would get it to place the levels automatically each day, and based on the levels, I would be looking for the market. If it opens between the R2 and the high, I'd be looking for a push up into the R2 and then sell on the way back down. So I'd want it to push up and then come back down through, basically threading the needle, and then come back down. So I would say that an algorithm, if I was designing it, I would get it to enter here and just hold, have a pretty tight stop, because we don't want to go all the way to the R3, we just want to get out if it's not working. So I'd probably have the standard stop I usually work with on the DAX is usually about 30 or 40 points. Ideally, I'd probably bring it in, and after a couple of candles being below this particular level, I would then consider bringing my stops to break even. Having the initial target at least, set to close a couple of points above the high, because people do get in early. They fade the gap and they get in early, perhaps by a couple of points. So I'd take part of the profit out at that point, depending on the volume, of course. And then the other thing I would be looking for, I'm just going to see if I can bring it up. Time frames. I would like to ideally check out, I can actually bring it up. So Control M for Market Watch, and then right click on the German 40, the one we want to check out, and then go specification. And then in here, we've got the swaps. So I'd be looking for a positive swap short if I was going to close part of the position just above the highs. Check if the swap short is positive, which means the broker pays me for holding the position open, and then retain some of that position, stops to break even, and perhaps target the previous day's low, for example, as if we reach here, we're going to close it. Alternatively, we're just going to hold the position overnight and just leave it on. All different logic that you can kind of have a play around with and see how it works. So I am just looking for different ideas and concepts to write code that'll watch the market for me, and then that way when the market opens I can go and do my own thing. I don't actually have to be at the computer, I don't even have to watch it. I can just let the code do its thing, obviously checking it and that kind of thing just to make sure it's doing what I expect. But aside from that, it's really just waiting for the market to do what it's meant to do. So I've had a very nice spike up, push into the R2. I've got the 5-minute bolly and the 15-minute bolly, so I'm pretty happy with that potential short. And see if it actually goes down. Anyway guys, that's it from me. I'm not going to hang around too much and watch this any longer. We're kind of approaching a double top. If the cam levels were very similar to the DAX, you'd probably have an R2 here. But then again, the market went higher than it was. It's lower now, whereas we're actually higher than what yesterday was on the DAX. bit of bullish activity on the UK, which would create a bit of concern about the potential for this to keep going up. So you're just using all these different elements to decide what the best action is. However, you don't want to overanalyze and panic every time the market moves against you, or get too excited when it's going in your favor either. So it's really a mind game, and that's what algorithmic trading is so good for, because it takes that pressure off. You set it up, you use a lot of logic and information to say, look, this is what I think should happen, and on the basis of probabilities, this is the risk that I'm setting, and I expect it to be positive long term. Then obviously you can do that, and you're not going to sit here and be like, oh, it's moving against me, or it's going in my favor, quick close the profits out, and then it goes all the way to your target, that kind of thing. So but that's some nice selling coming in. If it can break this structure downwards, that would be ideal, but if it comes back up, we could be in trouble. So we've broken. If that holds, we're pushing down. Really want it to just keep going down, and that would be ideal scenario. Anyway, guys, that's it from me. Hope you enjoyed the session. Like and subscribe if you enjoy these kind of sessions. Today wasn't a very active market, so it was very boring to watch. We're just sort of sitting waiting for the market to either touch a level or go to a target, and it's not really that active. It's not explosive, and that's another reason the algorithms are so good. You don't have to be sitting at your computer waiting for the market to do what it's got to do. You're just using logic to enter and exit the market, and hopefully you can wake up the next day and there's more money in your account. So that's been my focus lately, is coding these algorithms and that kind of thing. That's it from me, guys. Enjoy your day.